Hi, this is Mike Pisani, CEO of SmartOptionTrading.com. I wanted to share with you some of my thoughts here, not only on the markets, but on a name I included in my outperform list for this year, which I think is a safer play on the EV space and something that the average investor may be more interested in taking a look at. So about me, what I do is I look at technicals and I look at option flow to help me determine where to get into a name. And those are two big driving forces behind what I do on a daily basis, whether I'm day trading or looking for names to get into for a longer term investment or a swing type trade. So for today, I want to start off by talking to you about the S&P 500, because I think it's important to know where we are as we move forward in the next months. We're in a very bullish time of year. Right now, the S&P 500 here is at an all-time high, closing there on Friday. And we're going into the United States inauguration, which is typically a bullish run up into that. So I expect this to kind of keep going here at this point. But I would very much welcome a pullback, and especially when I want to make a long-term investment, I'd rather buy weaker than try to chase into strength. And right now, this market's kind of forcing us all to chase into strength. So what we're looking here is for the S&P 500, maybe a pullback to the 21-day, which is down around the 370 level, would be a great place to enter. You can see on the chart I have up, we're hitting the top of that uptrend, right? We have an ascending channel here. So we're either going to burst through it with power and just keep melting up for the next couple of weeks, or we're going to pull back a little bit and rest. And that would be much welcome. It might provide some better dips. So let's move on to the EV space. And I know everybody is raging. Everybody wants to be in the electric vehicle space. They want to be buying into it. And this is an interesting space. And when you look at the chart on Tesla specifically, Tesla's had this incredible run. And a lot of it isn't due to anything that's changed that they've done. They got a big bounce for joining the S&P 500. They got a big bounce for doing their stock split. But that really hasn't added any value to Tesla. But Tesla's had a huge run and has run way too much. And you look at some of the other names in the space, NIO's in the same place, but the rest of these names are very speculative. And a lot of these names were SPACs, special acquisition targets, where a consortium comes in, creates an IPO, and then buys a name to bring them public. And they don't get the scrutiny that we've seen with a company that typically does an IPO. So they're a little bit more dangerous. And the one thing I want to point out is a lot of these companies do not have any revenue and will not have any revenue for at least a year or two. That makes them a very risky play, whether it's RIDE or Workhorse or QS or LI or any of these symbols that everybody has been looking at lately. But if you're looking for a name that might fit the bill for a great play on EVs that's safer, take no closer look than coming deep into the United States and looking at General Motors. And the reason I bring up General Motors is this. General Motors is a safer play. They're not, they're established. We know that they have deep pockets. They have very little low debt. They fit the bill for what you're looking for in this space. They can do something nobody else can. They can ramp up production quickly. They have big capital. They have tremendous amount of production facilities. And there's something they have that specifically Tesla and NIO don't have. They have a sales force, right? They have dealerships, showrooms, and the ability to service these vehicles. All these other little companies, they don't have it. And Tesla's struggling with this as well right now. So, GM fits the bill because it's easy to trade. It's on the American stock market. Volvo, Porsche, also BMW are doing big time into the space, but GM fits the bill. And when you look at the chart, you look what's going on here. You had to move up to this all-time highs. That's my target one for the year, right? And then you had this steady pullback. Now this trade's already gone into play. But if the market dips and this one comes in, I would love to catch this around the 37 area. If you look down around the 37 area, you have a gap that remains unfilled. It can pull back to there, and then we can launch through that target and really take off. Now, this is not going to be a quick play. If you look at the EV space, these names double sometimes within 2 or 3 days. This is a longer term play. This is something you can wait, you can buy on the weakness. If you look at the weekly chart, another thing I like a lot about this name is you can see how long this name has been basing here for. It's had a long base, it's coming out of it now, just starting to break out. So if you got to pull back to 37 and a retest, I think GM might be a nice place to run. For me, that's where I'm looking to get into it. Thanks for listening. This is Mike with SmartOptionsTrading.com, and I hope you guys all have a great week.